Discover tax secrets for becoming a financial titan from the tax goddess, Shawna. And what's so special about Shawna is that she's a highly sought after certified public accountant and founder of Tax Goddess Business Services, established in 2004. And she has a global team of 93 specialists that uses plain language to help business owners, investors, and entrepreneurs create plans of action to increase the business owner's bottom line, reduce costs, and reduce taxes. So tell us, how can entrepreneurs become a financial titan through tax secrets?
Welcome to Awakened Titans podcast with Lily Patrascu. Mind-blowing conversations with influential business titans sharing how you can manifest abundance, love, joy, success through quantum awakening, quantum manifestation, quantum healing, quantum miracles, exponential business growth, and innovative products and services.
Ooh, I love it. Well, tax secrets is definitely the name of the game. So one of the things, and a little bit of background here. So because I'm ex-KPMG, which for the United States, it's one of the, well, for the globe, one of the 4 largest accounting firms, I was trained in all of the strategies that the big boys use to reduce their taxes. So Musk, Trump, Bezos, everybody here in the States. Now, this is unfortunately US only taxes, right? We don't look at foreign taxes, but the main piece of what we do is work with business owners and entrepreneurs to input those strategies into their day-to-day activities to be able to reduce the taxation. So how do you become a financial titan? Keep more of your money. If you're handing over to the government 37.53, the highest tax rate in the US is 63% for those in California. If you're handing over 63% of your money, very, very, very difficult to become a financial titan. You're handing all of your cash over to somebody else, something you can't control. So we love utilizing strategies in somebody's day-to-day life. So not significant changes, not massive restructuring of their entities, but looking at their day-to-day life, implementing strategies that get you a big bang for the buck and not a whole lot of work to do with them.
Thank you. So how can entrepreneurs get started with these tax secrets for becoming a financial titan? What do they need to do?
So 2 of the very first things and the most important pieces, take a look at what we call your aggression scale. So there's a scale from 0 to 10, 0 meaning the IRS will never call you, never ever, and 10 meaning we're all going to jail, and decide where you and your spouse, your family, sit on that scale. So generally the entrepreneurs will be at a 7, 8, maybe pushing 9, right? They really don't want to go to jail, but they want to be really aggressive. And so we look at which strategies we can apply, starting with the lowest risk. So starting with the level 0, 1, 2, 3, 4 strategies. And then if we have additional tax that we need to wipe out, we start looking at which of those strategies to apply. So step 1, know your aggression scale. Step 2, you need to have the proper team. Now, often people get confused between what's the difference. You can tell that I have quite a lot of letters after my name. I'm a CPA, master's in tax, all of these certifications, but it's not only about having a tax preparer on the team, right? It's generally you have a bookkeeper, you might have a financial advisor, you have your CPA, your tax preparer who actually prepares the returns. A strategist is a completely separate job role. And at least in the US, there's only 607 of us that are certified as tax strategists. So even if you're working with a CPA who says they do tax strategy, they may be looking at what we call the low-hanging fruit, right? The bottom items that everyone should be doing. And adding a tax strategist gives you access to a little over 1,900 strategies that most tax preparers don't look at.
Thank you. So what are the types of strategies that most tax planners don't look at?
Love it. Okay. Well, I'm not sure we have time for all 1,900 of them, but let's see if we can cover some of the big ones. One of the ones that we absolutely adore, and it's heartbreaking, but it applies in a million cases, captive insurance. Now, let's use the example of the wildfires that just happened in Los Angeles just recently. And many of the homeowners there, many of the business owners there, lost their homes, they lost their business buildings, they lost their offices, they lost quite a lot of maybe their inventory, these kinds of things. Unfortunately, many of the insurance carriers in California are denying claims. They're not paying out. If you have a captive insurance company with a business purpose, and this would be one of them, if you lost all of your inventory, you need to buy inventory, you need to get paid to replenish that inventory to run your business. A captive insurance company can actually give you a fantastic tax deduction and prevent major issues like the wildfires. So captive insurance is one we use a ton. If you want something a little bit on the smaller scale, because captive insurance can go all the way up to 2.3 million in a deduction. If you want something on the smaller scale, everybody's heard about paying their kids. What about paying your dogs? Now, there's a lot of people, depending on the business, right? You yourself are in the marketing world here, right? You're front and center is this beautiful figure. The writing off your dogs, if you have a business purpose for the dog, you can actually write off the dog. So maybe it's medical, maybe it's security for that inventory. Okay. Maybe you've got a YouTube channel that is showing your dog as key and center. We've seen a ton of these puppy influencers, right? So that would allow everything related to your dog to be a deduction. So when we look at tax strategies, it's really very dependent on who you are and what is your story and where are you trying to go, right? Some people are more focused on retirement. So we might be looking at cash balance plans or infinite banking, premium financing would be some of the types of strategies. You have other people that are trying to build a charitable world, right? Maybe they're really focused on charitable funding for their church or other organizations. We might look at a CLAT or private foundations and how do we utilize those strategies integrated with your day-to-day life to be able to reduce the overall taxes. So strategies are very dependent on who you are and what you're trying to get to.
Thank you. Let's take a property business. Let's say someone who wants to build a property empire of property investments where they say, let's say they buy property with some sort of mortgage and then gradually they keep buying. What do they need to do in order to reduce their tax?
Absolutely. Well, so there's, excuse me, you're getting me all excited about taxes. And so getting myself all worked up here. I love it. So there are 3 statuses that everybody knows about. And I want to cover the 2 that people do not. So there's actually 5 total statuses. The 3 main ones that everybody knows. You have passive, active, and real estate professional status. Now, if you can get real estate professional status, that means that everything in your real estate empire becomes a true business in the eyes of the IRS. Which means that for tax strategies, we can use things like cost segregation, writing off the dog for security, paying the children, putting into place retirement plans. There's 1,000,001 strategies we can apply once you're a business. What a lot of people don't know is that specifically in real estate, there's 2 other classifications, okay? One of them is what we call the Airbnb classification, okay? And one of them is significant services. So you might have an Airbnb empire. We saw Airbnb blow up about 7 to 8 years ago. You might be buying properties, putting them on Airbnb, but if you are not providing the significant services, those will all be considered passive rental properties versus if you are providing significant services like think a bed and breakfast kind of thing, concierge, you're helping them buy tickets, to go to events, picking them up from the airport, these kinds of items. You can actually create a business out of that as well. So you don't have to be a real estate professional. You can actually qualify under the significant services, the 5th category. So.
Thank you. For those entrepreneurs wanting to build a property empire in the US, and let's say if they also have a property empire in the UK, does the fact that they have a property empire in 2 countries, does that impact the tax that they pay in the US?
I love it. So good or bad, the answer to that question begins with, well, who are you a citizen of? So if you are a UK citizen with an empire in the US, that is a different world. If you are a US citizen with an empire in the UK, That's a different world. So I will answer from the perspective of you are a US citizen or US green card holder, and you have an empire in the US and in the UK. The US government, as a citizen, requires that you pay tax on all earnings everywhere. Doesn't matter what country, doesn't matter. I'm sure if the IRS could do it, they would probably tax you even if you built property on the moon. Okay. They want to know every dollar of income from everywhere, doesn't matter what the country is. Now, the biggest difference is that if you have US-based property, you can use tax strategies like cost segregation, accelerated depreciation. You can use these strategies to massively reduce your US tax bill. But with overseas property, so your UK property, you're not allowed to take some of those types of strategies. So you do need to be looking at the combined total between both. Now, you may, in fact, also be paying taxes to the UK government for your UK properties. There are some tax treaties and some tax credits that you're allowed to take between multiple countries, but that is very, very specific to which country, how much you're making, all sorts of factors. So it's one of the calculations that as a strategist, we would rely on a really good tax preparer to help us run those calculations for any specific tax term.
Thank you. What should entrepreneurs prepare if they were to have a property empire in the US and the UK? Do they need to prepare things in advance so that they know what kind of things they will be taxed for? Or do they just come to you at the end of the year and just go, here, this is what I spent this year?
You can, okay, but you're not going to like the outcome if you do it that way. So great question. Yeah, you hit the nail on the head. What can you prepare? Documentation, when we're talking about US taxes, documentation is key, period. What do you have? What did you spend? Where did you spend it? What kind of receipts do you have? Any kind of documentation you have about your properties, about what's going on. Now, as a strategist, what we recommend, because you're right, Lily, many people show up to their tax preparer's office. January through December is when we can make all the changes. They show up to their tax preparer's office in February, March, April, and say, okay, great, it's time to prepare the tax return, save me money. When the year is over, the year is over. There's not a whole lot you can do. December 31st is that cutoff. So generally what you want to do, and what we recommend as strategists, is that you have a meeting at least minimum twice a year during the year about that year to know, well, if I buy the property this way, or if I sell the property that way, what is that going to do to my taxes? And what kinds of strategies can we put into place before December 31st to try to minimize any taxes that may have occurred from a buy, a sell, whatever's happening. So, I'm so sorry.
Is it useful to set up a trust in order to put the properties in for tax purposes? And if yes, what would be the pros and cons?
Love it. So there's multiple different kinds of trusts. And so really that question is a very big, broad, vague question, depending on if we're talking about, for example, a revocable trust that has zero tax impact. Okay. But we might be talking about a deferred sales trust, which would allow you to sell properties but not pay tax on them. We might be talking about an irrevocable trust that might pass on the assets to your heirs, right? Maybe you don't need that money anymore. And so you're creating an empire for the heirs coming down the line. So depending on what kind of trust you have, is it the right trust for you? This is a part of the team that you should really have involved with you, is an estate and trust attorney who specializes. If you're real estate, you want to have somebody specializing in real estate.
Thank you. What other considerations should entrepreneurs have if they need to pay tax in the US?
Yeah, I like the way you phrase that, if they need to pay tax in the US, because the hope is that we get you down with strategies, right? Hope is not a strategy. Strategies are strategies, right? Sorry, strategies are strategies. So, we absolutely want to try to get you down to as minimum tax as possible. But if you want to pay tax, I think if you have to pay tax, I think the most important strategy that you can have is know that the tax is coming in advance. Right. And so this goes back to make sure you're having those at minimum twice a year meeting with your strategist to say, okay, it's December 1st. if I don't make any other changes, how much money am I going to have to write a check for on April 15th to the IRS and to the state governments, so that you have 5 months to collect that cash from the sale of a property or pulling it out of the stock market, whatever is going on, to be able to have you prepared. I think something that nobody likes is a surprise. Nobody wants to find out on April 12th that you owe $1 million on April 15th, right? It's not good for anyone, including your strategist and your CPA and you as a client. So I think one of the best preparations is having a plan and having those meetings to be prepared.
Thank you. What is the best strategy to do the taxes so well that you never get, like a tax investigation from the IRS?
An audit. Oh, that's such a loaded question, Lily. I love it. It's a great question. So as I mentioned, the scale, right? 0 to 10, you have to decide where you want to sit on that scale. Okay. If you decide that you want to be at a 7 or an 8 or a 9, you can almost assume that there will be an audit at some point in the future. Okay, but you're making that choice because you want the deductions, and the deductions are legal. So let me back up. Anything, because I'm a CPA, anything that I would recommend is going to be legal because, as I always say, red and orange don't do well together. I'm not going to jail. We're not doing it. Okay, so making sure that you're looking at where you want to be on that aggression scale. If you never, ever want an audit, you may only want to use strategies that are at a level 0, 1, 2, right? You want to be way on that super conservative end of the aggression scale. But if you're okay with having an audit, as long as you have all the backup, all the proof, right? All the detailed records, then maybe you choose the aggression level of 7, 8 up higher on that scale. So.
Thank you. What are the best strategies that some entrepreneurs that you've helped to reduce their tax and to thrive in business?
Oh, that is such a good question. Really, the idea of thriving is very dependent on the person. So let me give you a perfect example. When I very first started in tax strategy, at this point, it was 25 years ago, right? I'm getting choked up here a little bit because this is a really powerful story. About 25 years ago, I had a client come to us, small business. She was just starting. Okay, she just made her first $250,000. She was so excited, right? She's just starting her business. She wanted tax strategy, so we started working on the tax plan with her. Started asking all the questions. On the day that I was to deliver her tax plan to her, okay, she came in and she was clearly crying. Eyes were puffy. Everything was red, right? She was clearly super upset. She was distracted. She was fidgeting. She couldn't sit still in the chair. And I asked, "Do you want to reschedule? Are you okay? You don't seem all right. What's going on?" And she said, "I just found out that my 5-year-old son has cancer, and it's going to cost me $40,000 to pay for his treatment, and I don't have that. I'm a business owner. I spend my money on inventory. Like, I don't have that. I don't know how we're going to do that as a family." And when somebody says that to you, you get a little taken aback for a moment. And I said, I know you don't want to talk about tax plan right now. Obviously, that is not the most important thing in your life at the moment. But can I show you something? Just one page. I want to show you something. We had saved her $65,000 on her tax bill. She got her money for paying for her son's cancer treatment from tax planning. So. And I'm getting goosebumps telling you this story. Okay, one of the most important pieces of tax planning, I think, to me, is you never know what's going to come. You never have any clue what's about to happen in your life, and so being as prepared as humanly possible, right? Saving as much money, keeping that cash for you, protecting your family, protecting your business, probably one of the most important things that a strategist can help you do. So,
tell us more about those 1900 potential strategies to save tax.
Absolutely. I think I might just have to send you a list here, Lily. So I think the way that we look at tax strategy. So as a tax strategist, this specific category, this CTC, CTP, CTS, these are designations. These are training designations, right? How we're ranked in the US. Many of us that have these designations, I personally, I look at myself as almost a red-headed dragon sitting on top of a pile of gold, okay? And every gold coin is a strategy. And so a part of my job as a strategist, of course, is to actually strategize for specific people. But the other part of my job is to be always on the lookout for new strategies, right? So has somebody created a new type of partnership? Is there a new type of write-off? Is there a new court case that talks about how you write off your dogs, how you write off your kids, right? So a part of my job is education, is kind of gathering these gold coins so that when a client comes to us as a strategist, we can come back and say, okay, of the pile of 1,900 gold coins, for you specifically, Lily, you're going to want these 23. And it's very custom. So it's almost like looking at a chessboard. You know, every single person has different pieces in their life, right? Are they married? Do they have kids? Do they own their house? Do they rent? Do they own a business? Do they have rental properties? You know, all of these pieces are different members of the chessboard. And each part has its own set of rules. So knowing which strategies out of the 1,900 that can apply to a specific person, I guess that's the tax goddess gift. So there you go.
Thank you. For US property investors, what would be the benefit of using a trust, for example, for tax benefits?
Absolutely. Okay. So a lot of trust items are more looked at from a legal perspective, right? So how do I ensure that if somebody trips and falls inside one of my properties, they can't get all of my properties, right? So segregating liability is a great answer here. Passing on things to your children. If you're trying to build the empire, right, you may start to get your kids involved in day-to-day operations. But, you know, we've all seen cases where one daughter is amazing and she's the best daughter ever. And then maybe the other child's not so much and they have some problems and you're concerned about whether you should pass on or whether they should get access to assets. So trust planning can be amazing for that. I've also seen trust planning very specifically for the types of property and for things like equity stripping, being able to get into partnerships, you know, have multiple partners inside a trust, be able to manage assets. So trust can really be used from both the legal standpoint and the tax perspective, depending on what it is you're trying to accomplish.
Thank you. In terms of people that are already using CPAs and financial planners and let's say people using your services, what would you say tend to be the differences? Is it that you just know a lot more of these tax secrets and therefore they are able to leverage these 1,900 potential strategies for saving tax that maybe they may not know? Is that what it is?
I think a big piece of it is if you think about what people specialize in. Excuse me, one second. If you think about what people specialize in, so you know, your tax preparer's job is specifically to prepare your return and make sure that all the check boxes are in the proper place, right? You had this income, I'm reporting it. You check this box to file this election, right? Compliance is a very specific skill set. All right. Now, I have done compliance for 25 years. I've done compliance. Okay. But strategy is a different mindset. It's coming at the problem not after everything is done, but it's coming at the problem before anything occurs. So where do we want to go? It's much more creative from that standpoint. You know, and we get this, I'm going to call it a complaint. We get this all the time. Somebody calls our office and says, Shauna, I'm sick of it. I'm tired of it. Every single year, I ask my tax preparer, what can I do to reduce my taxes? And every single year, they tell me, do a 401k and buy a car. I already have 5 cars. I don't need another car, right? I'm tired of it. I want something different. And so I'm never upset or mad at CPAs. We need tax preparers. We need CPAs to be able to prepare the returns, but it's not their job to look out for all the strategies that could potentially apply, right? They're face down doing their tax returns. And this is why I always look at it as a team. You have to have the strategist and the preparer. And so, you know, when somebody calls us and says, well, I'm frustrated, I'm not getting any strategy, I'm going to leave my CPA, time out, right? Is your CPA doing a good job? Have you ever been audited? Like, have there been any problems? Well, no. Okay, so you don't need to leave your CPA. Your CPA may be fine. They may just not No, right? This isn't their job to watch the court cases. I mean, if you think about it from this perspective, as a strategist, I get something, I think it's 3 emails a day from the IRS and 1 email every single week from every single state, right? So 50 plus states plus the territories. Okay. It is our job as strategists to know all the things, right? And you cannot, they're two very distinct jobs. There's just not enough time in the day for your preparer to also read everything that's happening every day. So
Thank you. Tell us some of your case studies of clients you've worked with that have been able to save a lot more tax than they were expecting.
I love it. Probably one of my favorite things to talk about is our case studies. So so just a big picture here. So far, we've saved our clients 1.7 billion this past year for 2024. And our average tax rate is running right now at about 6.92%. So every single case, of course, is different because it's custom to the person, to the family. I just delivered one yesterday. A physician, she was taking home about $350,000 a year, paying about $110,000 in tax, living in California. We got her down to paying a little over $5,000 a year in tax. Got her set up with her new business. So, really meeting her goals from that standpoint. Another case, a very large case, we had a 5-business partnership, right? So 5 partners in a business. It was a real estate portfolio. They sold the business and the real estate portfolio for about $250 million, and they were going to pay about $125 million in tax. We reduced it by $112.4 million on the sale. So when we talk tax strategy, it's, I always want people to know you don't have to be super mega Trump billionaire, right? Like Bezos, you don't have to be them. You can be small and you can have a business. You can be starting out. Really, tax strategy makes the most sense when you're paying about $100,000 a year in taxes or higher. So right at that kind of cutoff.
Thank you. What are the most successful, you can say, projects you've worked on for your clients? Would you say that you're you can say proudest of?
Oh, well, certainly, paying for somebody's cancer was pretty, that was kind of a moment for me from our earlier story. But I think for me, it's more about hitting somebody's goals, right? So if somebody wants to retire, great. How do we get the most amount of money into retirement? If somebody wants to build that empire, how do we do that? If somebody wants to, we had one client, he called, I loved it. Another favorite story here. He called before he even said his name. Okay, so I pick up the phone. I'm like, hi, this is Shauna. He says, I want to write off a yacht. Do you know how to do that? I'm like, yes, we know how to do that. Hi, my name is Shauna. What's your name? So, getting people to whatever it is in their heart that they desire. We've done, you name it, we've done it, right? We've told people to sell their businesses, keep their businesses, set up ESOPs for their staff to give them, a transfer of wealth. We've set up generational trusts. You name it, we've done it. I think it always makes my day when I can deliver a plan that has a 0% tax rate, and that happens pretty frequently. So it's good stuff. So.
Thank you. Is there any way to leverage loans in order to help you to build other businesses? So for example, let's say you have a property empire or some other empire, and then you're making a lot of profit. Is there any way to kind of use some of that profit to give a loan to another company that maybe you're starting to do something else to maybe like build more properties or something else? Is there any way to basically leverage loans to help you build more businesses?
Absolutely. Yeah. And so really the first step when you're looking at loans and lending is how leveraged do you want to be, right? Because that kind of goes back to that aggression scale. Some people don't want to be leveraged at all. And some people want to be very leveraged and they'll take the risk that goes along with the leverage. So as long as your banker is good, or you can go to private lending, loan sharks, I suppose that maybe the mafia would be the last choice. Don't do that. But, stay above board here, people, right? But yeah, if you have an asset, doesn't matter what that asset is. If it's a business, if it's real estate, it could be stocks, you could be an options trader, whatever it is. If you have an asset, are you allowed to take a loan and diversify your portfolio or buy more of the same portfolio? Absolutely. Now, how you write off the interest on the loan always becomes a question when we get to the tax return portion, right? And so if you're taking out a loan to buy something personal, that interest is typically not deductible, okay? But if you're taking out a loan to buy a business or build something new, then yes, typically it is. So
Thank you so much. Tell us where entrepreneurs can find you.
so we are super easy to find. So taxgoddess.com, always really easy to reach out to our team, and we run analysis and take a look at who you are, what you do, and how we can help you. So
Thank you.
Follow us for more interviews with world's most influential business titans, providing you with the insights to awaken to your full potential so you can get paid to be yourself, find true happiness, and manifest anything you desire.